Hello, dear students. Welcome to Rajeshwari's Commerce and Management Study Hub. Today, we are discussing about basics of accounting. So, what are all the topics I'm covering in that basics of accounting is what is accounting, process of accounting, elements of accounting, modern approach, traditional approach towards the accounting. So, this video mainly for the students who are from non-commerce background, useful for the commerce background also. When you are conceptually clear, it helps you to solve the practical problems also. So you won't face any difficulties while solving the practical problems. So first we will understand what is accounting, why we need accounting. See, if you are running a business, you will have a thousands or lakhs together of transaction in a very accounting year. So you may not be able to recall each and every transaction, and you won't be able to understand where you are, right? So for that, you need one language to interact with your business. So this accounts will help you to understand the progress of the business. That's why accounts is called as language of business. Here you can see one of the definition of accounting. That is, what is accounting? It is the process of identifying, recording, classifying, summarizing, interpreting, and communicating financial information. It helps in communicating the results of the business activities to the users of financial information. Are you feeling complex with this definition? You're feeling accounts will be very difficult? No, it's very easy. After this video, you will feel the accounts is very easy. So we'll make it this complex definition into this simple one. Accounting deals with measurement and reporting. So whatever the identifying, recording, classifying, this process is called measurement. You need to measure. You need to know the value of your business, whether you are in profit or loss, income or expenses. So to know these things, you need to measure. So that's why it is called measurement. And you need to interact the reporting with the internal users as well as the external users. So you will have stakeholders. You won't be able to run business individually. ಅಲೋನ್ ಯು ಕಾಂಟ್ ರನ್. ನೀವು ಒಬ್ಬರೇ ಬಿಸ್ನೆಸ್ ನಡೆಸೋಕ್ಕಾಗೋದಿಲ್ಲ. ನಿಮಗೆ ಕ್ರೆಡಿಟರ್ಸ್ ಬೇಕು, ಡೆಟರ್ಸ್ ಬೇಕು, ಸಪ್ಲೈಯರ್ಸ್ ಬೇಕು. ಸೊ ಹೌ ದೇ ವಿಲ್ ಕಮ್ ಅಂಡ್ ಇನ್ವೆಸ್ಟ್, ಹೌ ದೇ ವಿಲ್ ಟ್ರಸ್ಟ್ ಯು. So this accounts will build the trustworthiness by giving your financial data, financial information. See, that is why it is called as you are giving a summarized the financial data into meaningful format. So they want to understand it, no? ಅವರಿಗೊಂದು ಫಾರ್ಮೆಟಲ್ಲಿ ಕೊಡಬೇಕು ನೀವು. ಅವ್ರಿಗೆ ಅರ್ಥ ಆಗ್ಬೇಕಂದ್ರೆ ನೀವು ಇನ್ಕಮ್ ಇಷ್ಟು, ಎಕ್ಸ್ಪೆನ್ಸಸ್ ಇಷ್ಟು ಅಂತ ಬರೆದುಕೊಟ್ರೆ ಅರ್ಥ ಆಗುತ್ತಾ? ಅದಕ್ಕಂತಾನೆ ಒಂದು ಫಾರ್ಮೆಟ್ ಇರುತ್ತೆ. ಆ ಮೆಥಡ್ಸ್ನ ನಾವು ಯೂಸ್ ಮಾಡ್ಕೋಬೇಕು. ಸೊ ದ ಮೀನಿಂಗ್ಫುಲ್ ಫಾರ್ಮೆಟ್ಸ್ ಆರ್ ಇಯರ್ ಬ್ಯಾಲೆನ್ಸ್ ಶೀಟ್. ಬ್ಯಾಲೆನ್ಸ್ ಶೀಟ್, ಇನ್ಕಮ್ ಸ್ಟೇಟ್ಮೆಂಟ್, ಕ್ಯಾಶ್ ಫ್ಲೋ ಸ್ಟೇಟ್ಮೆಂಟ್, statement of changes in equity. Changes in equity. So we'll understand more about these meaningful formats in the next videos. Now, what are the process of accounting? Process of accounting is nothing but sources document. In accounting, you need an evidence. Without an evidence, you are not going to pass any entries or record any entries. That is called voucher, receipts, bills, invoice. These are all called your sources of document. With the help of those sources of document, you are going to journalize. You are recording those entry. After journalizing, then you are posting them into ledger. See, here in ledger you won't call it as it is recording, because already whatever you have recorded in the journal, that you are going to post in the ledger. Once you have prepared a ledger account, individual accounts, then you are posting them into the trial balance. After trial balance, you will prepare a financial statements. The financial statement includes income statement, balance sheet, cash flow, sources of changes in equity. Okay, so here you can see the meaning which I have already explained you. You have seen some of the words, right? The process of identifying, recording, classifying, summarizing. See here, the sources of document is nothing but you are identifying and measuring. So you need to identify. You are not going to record all the transaction whichever happened in the business. You are recording only the transaction which involves money or money's worth. So that's why you need to identify the financial character transactions, that identifying, measuring. After that, after identification, you are recording in journal. Then you are classifying into the similar nature groups. So that is called your ledger. After that, you need to give a summarization, condensed, because lags together transactions book, if you give it to your users, how they are going to understand? So you need to condense it. ನೀವು ಇನ್ಫಾರ್ಮೇಶನ್ ನ ಅರ್ಥ ಆಗೋ ರೀತಿ ಕೊಡ್ಬೇಕು. ಇನ್ಫಾರ್ಮೇಶನ್ ಇದೆ ಅನ್ಬಿಟ್ಟು ಹೋಲ್ ಬುಕ್ ನ ಕೊಟ್ರೆ ಅವ್ರಿಗೆ ಅರ್ಥ ಆಗೋದಿಲ್ಲ. ಅದಕ್ಕೆ ಏನ್ ಮಾಡ್ಬೇಕು, ಅದನ್ನ ಸಿಂಪ್ಲಿಫೈ ಮಾಡ್ಬೇಕು, ಕಂಡೆನ್ಸ್ ಮಾಡ್ಬೇಕು. ಎಲ್ಲಾ ಇನ್ಫಾರ್ಮೇಶನ್ ಅದ್ರೊಳಗಡೆ ಇರಬೇಕು, ಆದ್ರೆ ದ length should be reduced. So that's why you need to summarize it. Analyzing, whatever you have summarized, that you need to analyze ಮಾಡಬೇಕು. So analyzing, after analyzing, you need to interpret it. What happened with the past event, present event, and what is going to happen in likely in the future also. That is what you are going to interpret. So interpret ಮಾಡಿದ್ಮೇಲೆ ಏನು ಸಮರೈಸ್ ಮಾಡಿ ಅನಲೈಸ್ ಮಾಡಿ ಇಂಟರ್ಪ್ರಿಟ್ ಮಾಡಿರ್ತೀರಾ ಅದನ್ನ ನೀವು ಕಮ್ಯುನಿಕೇಟ್ ಮಾಡಬೇಕು ಯೂಸರ್ಸ್ ಜೊತೆ. ಯೂಸರ್ಸ್ ಅಲ್ಲಿ ಇಂಟರ್ನಲ್ ಯೂಸರ್ಸ್ ಬರ್ತಾರೆ, ಎಕ್ಸ್ಟರ್ನಲ್ ಯೂಸರ್ಸ್ ಬರ್ತಾರೆ. ಸ್ಟೇಕ್ ಹೋಲ್ಡರ್ಸ್ ಅಂತ ಕರಿತೀರಿ ನಾವು ಇಂಟರ್ನಲ್ ಯೂಸರ್ಸ್ ನ. ಎಕ್ಸ್ಟರ್ನಲ್ ಯೂಸರ್ಸ್ ಅಲ್ಲಿ ನಿಮ್ಗೆ ಪಬ್ಲಿಕ್ and other people will be coming under the external users. Now, are you clear with the meaning and process of accounting? Yes. Now we will go to the under basics of accounting. The most important part is elements of financial statement. So financial statement elements ಅಂತಾನೆ ಕರಿತೀರಿ. ಇಲ್ಲಿ ಇರೋದು 5 ಎಲಿಮೆಂಟ್ಸ್, 6ನೇ ಎಲಿಮೆಂಟ್ ಬರೋದಿಲ್ಲ. 5 elements most important that will construct your whole business. The whole business comes under this 5 elements only. That's why it is called as 5 elements of financial statement anta karitiri. So ಯಾವ್ದು 5 financial elements? Liability, equity, revenue, asset, expenses. ಈ 5 ಎಲಿಮೆಂಟ್ಸ್ ನ ನಾವು ಇನ್ ಡೆಪ್ತ್ ಆಗಿ ತಿಳ್ಕೊಳ್ಳೋಣ. ಮೊದಲನೇದಾಗಿ ನಾವು ಅಸೆಟ್ ಅಂದ್ರೆ ಏನು? ಅಸೆಟ್ ಅಂದ್ರೆ ಏನು? ಆಸ್ತಿ ಅಲ್ವಾ? ಆಸ್ತಿ ಅಂತ ಯಾವಾಗ ಕರಿತೀರಾ? ಪಕ್ಕದ ಮನೆಯವ್ರ ಆಸ್ತಿ ನಿಮ್ಮ ಆಸ್ತಿ ಅಂತ ಹೇಳ್ತೀರಾ? ಇಲ್ಲ. ಸೊ ವಾಟ್ ಇಸ್ ಓನ್ ಬೈ ಯು, ಅದನ್ನ ನಾವು ಪ್ರೀವಿಯಸ್ ಆಗಿ ಹೇಳ್ತಾ ಇದ್ರಿ. ನಾವು ದ ಡೆಫಿನಿಷನ್ ಹ್ಯಾಸ್ ಬಿನ್ ರಿವೈಸ್ಡ್. ಸೊ ವಾಟ್ ಈಸ್ ಅನ್ ಅಸೆಟ್? An asset is a resources controlled by an entity. This is very important. Controlled by an entity as a result of past events and from which future economic benefits are expected to flow to the entity. See, earlier whatever you are owning, that will be called as your asset. But ಇವಾಗ ಹಾಗಲ್ಲ. ಓನಿಂಗ್ ಜೊತೆ ನಿಮಗೆ ಕಂಟ್ರೋಲಿಂಗ್ ಇದ್ರೂ ಆಗತ್ತೆ. ಅಂದ್ರೆ ದ ಅಸೆಟ್ ವಿಚ್ ಯು ಹ್ಯಾವ್ ಲೀಸ್ ಅಗ್ರಿಮೆಂಟ್ ಆಗಿರತ್ತೆ, ಅದನ್ನು ಕೂಡ ನಾವೇನಂತ ಕರಿತೀರಿ? ಅಸೆಟ್ ಅಂತಾನೆ ಕರಿತೀರಿ. ಅಂಡ್ ಬರೀ ಕಂಟ್ರೋಲ್ ಇದ್ರೆ ಅಷ್ಟೇ ಅಲ್ಲ, ಅದ್ ನಮ್ಗೆ ಎಕನಾಮಿಕ್ ಬೆನಿಫಿಟ್ಸ್. ಅಂದ್ರೆ ಒಂದು ನೀವು ಮಿಷಿನರಿ ತಗೊಂಡ್ರೆ, ಆ ಮಿಷಿನರಿ ನೀವು ಇವತ್ತು ತಗೊಂಡಿದ್ದೀರಾ, ನಿಮಗೆ ಅದು 10 ವರ್ಷ ಲೈಫ್ ಟೈಮ್ ಇರುತ್ತೆ. ಆ ಲೈಫ್ ಸ್ಪ್ಯಾನ್ ಅಲ್ಲಿ ನಿಮ್ಗೆ ಪ್ರೊಡಕ್ಷನ್ಗೆ ಹೆಲ್ಪ್ ಮಾಡುತ್ತೆ, ಅದರಿಂದ ನಿಮ್ಗೆ ಬೆನಿಫಿಟ್ಸ್ ಬರುತ್ತೆ. ಸೊ ದಟ್ಸ್ ವೈ ಇಟ್ ಈಸ್ ಕಾಲ್ಡ್ ಆಸ್ ಎಕನಾಮಿಕ್ ಬೆನಿಫಿಟ್ಸ್ ಆರ್ ಎಕ್ಸ್ಪೆಕ್ಟೆಡ್ ಟು ಫ್ಲೋ ಟು ದಿ ಎಂಟಿಟಿ. ಸೊ ಇವತ್ತು ತಗೊಂಡು ಇವತ್ತೇ ಇಲ್ಲ, ನನಗೆ ಇದು ಇನ್ನು 10 ವರ್ಷ ರಿಟರ್ನ್ ಕೊಡುತ್ತೆ, 20 ವರ್ಷ ರಿಟರ್ನ್ ಕೊಡುತ್ತೆ, ಬೇಸ್ಡ್ ಆನ್ ದ ಲೈಫ್ ಎಕ್ಸ್ಪೆಕ್ಟೆನ್ಸಿ ಅಂಡ್ ದ ವರ್ಕ್ Then by that particular machinery or asset, whatever you have purchased, the benefits given to the entity will be considered as an asset. ಆವಾಗ ಅಸೆಟ್ಸ್ ಅಂತ ಕರಿತೀರಿ. ಸೊ ಅಸೆಟ್ಸ್ ಅಲ್ಲಿ ನಿಮಗೆ ಮಿಷಿನರಿ ಎಕ್ಸಾಂಪಲ್ಸ್, ಮಿಷಿನರಿ, building, rent, so which are all going to give benefit to in the future. Those are all comes under the machinery. It can be a long term also and short term also. So those are all called as your assets. ಇದನ್ನೆಲ್ಲ ನಾವು assets ಅಂತ ಕರಿತೀರಿ. So understood assets? Then we'll understand what is expenses. Expenses. So expenses ಅಂದ್ರೆ ಏನು? An expenses is the cost of operation that a company incur to generate revenue and from which no further benefit is expected. So here you need to observe no further benefit. Expenses ನೀವು ವರ್ಕ್ ಮಾಡ್ತಿರ್ತೀರಲ್ಲ ಆಪರೇಷನ್ಸ್ ಆಕ್ಟಿವಿಟೀಸ್ ಅಲ್ಲಿ, ಡೇ ಟು ಡೇ ಬಿಸ್ನೆಸ್ ಅಲ್ಲಿ ಒಂದ್ಸರಿ ಇನ್ಕರ್ ಮಾಡಿದ್ಮೇಲೆ ಅದರಿಂದ ನಿಮಗೆ ಫ್ಯೂಚರ್ ಬೆನಿಫಿಟ್ಸ್ ಏನು ಬರಲ್ಲ. ಸಿ ಹಿಯರ್ ಯು ಕ್ಯಾನ್ ಸಿ ಎಕ್ಸಾಂಪಲ್ ಆಫ್ ರೆಂಟ್. ಈ ತಿಂಗಳು ರೆಂಟ್ ನೀವು ಪೇ ಮಾಡಿದೀರಾ, ಅದನ್ನ ಮುಂದಿನ ತಿಂಗಳಿಗೆ ಬೆನಿಫಿಟ್ ಕೇಳಕ್ಕಾಗಲ್ಲ. ನೆಕ್ಸ್ಟ್ ಮಂತ್ ರೆಂಟ್ ಪೇ ಮಾಡಲ್ಲ, ನಾನು ಈ ತಿಂಗಳು ರೆಂಟ್ ಪೇ ಮಾಡಿದೀನಿ ಅಂತ ಹೇಳಲಿಕ್ಕೆ ಬರೋದಿಲ್ಲ. ಎಲೆಕ್ಟ್ರಿಸಿಟಿ, salary, every month you need to pay for the work they have done. So whatever you have paid presently, it will not affect your future. So there is no further benefit. That is very important in your the meaning of expenses. Next element is liability. A present obligation of the entity to transfer an economic resources as a result of past events. So here it is very important. Liability ಅಂದ್ರೆ ಏನು? Obligation, ಸಾಲ, ಜವಾಬ್ದಾರಿ. A present obligation of the entity to transfer an economic resources. Here you can see you are in the need of money. So you approached a bank. You approached a bank. We'll take any one of the example. Example, SBI bank you have approached for loan. For loan. Now the bank is sanctioned a loan to you. A present obligation of the entity. The present obligation, your obligation was loan. You need a money. You are in the need of money, so you approached the bank sanctioned loan to you. Transfer and economic resources. Today they have transferred. Are you going to keep this money with you only? You will repay. How you are going to repay? If you write in one paper loan, they will take it? No. You need to pay it through cash, right? So that is why it is called as economic resources. The assets are called economic resources. How you are going to repay the loan to the bank? By cash. By cash. Economic resources as a result of your past event. Okay, understood what is the liability. And here one more thing you need to observe, that is it is a claim of outsider on total assets of the company. They can claim outsider because you will borrow loan or liability. The obligations arises with the outsiders. So outsiders example, your supplier. Presently you want to purchase assets but you don't have a money. You are purchasing on credit basis. Credit basis means immediately you are not going to pay cash after the purchase. You are going to pay later. So outsider can claim on your total assets of the company. Any doubt in liabilities? The next obligation is equity. Equity is also called as capital or capital. Capital. Why? When it is called as capital or equity? See, capital, it is called when you are in a partnership firm. You will have limited number of partners. So then it is called as capital. If you are in a company, if you are in a company, then you will create a unit of, you collect unit of money from the public. They are called shares. The unit of capitals are called shares. The shareholders becomes owners. Owners. The shareholders becomes owners. If it is a partnership firm, you will have a limited owners. So there you can call it as capital. If it is a company, you will create unit of money through shares. They are called your shareholders. They'll become owners of the company. That's why you will call it as a equity. Because there will be a thousands or lakhs of owners. That's why you will call it as equity. So now understood the difference between capital and equity. It is the residual interest in the total assets of an entity after deducting all its liabilities. All its liabilities. It is the claim of owner in the total assets. So here liability means it is a claim of outsiders. Outsiders can claim on total assets. But when it comes to equity and capital, it is the claim of owners in the total assets. Even owners can also claim. So that is, you can see in the liquidation or while winding up of the company, you will make payments to all your liability outsiders, the obligations, whatever you have created, you will clear. After that, the remaining amount will belongs to the owners. That's why it is called as claim of owners in the total assets. So the next element is revenue. Revenue. So what is revenue? It is the gross inflow of cash. Gross inflow of cash, receivables or other consideration arising in the course of the ordinary activities of business such as sale of goods, rendering of services. So whatever, when you sell goods, you will receive a money, the receivables. The inflow will be in cash. So that is called as your revenue. When you render any services, then you will receive money. So that is also called as your revenue. The gross inflow of cash. It is gross. It is not the net amount. After deducting all the expenses, whatever you incurred for earning this, generating this revenue, then it is called as net revenue. So before that, it is called as gross revenue. Now we have completed all the 5 elements of financial statement. So what is the main difference between liability and equity? Here also outsiders can climb on total assets. Owners can climb on total assets. But the main difference is the first preference will be given to the liability. Outsiders. First, their obligations will be cleared. After that, only in the remaining, it is distributed to the equity shareholders. And this equity also includes the retained earnings. Retained earnings means whatever the profit you have holded back in the business, that is called as plugging back into the business. The part of the profit is declared as a dividend. Dividend will come under your expenses. Dividends are coming under expenses, but the retained earnings are coming under the equity. You are not distributed to your shareholders. You are plugging back into the business as a capital. In That's why it is called as equity, coming under the liability under the capital, equity or retained earnings. Revenue means whatever the gross cash inflow into the business through your operations, through sales, or by rendering a services. Any revenue you have generated, the cash flow inflow you have received in the form of any consideration is called as your revenue. Asset means the with the help of past events, whatever the economic resources which is going to help you to generate future economic benefits, that is called as your assets. Now, how we are recording, how we are showing this five elements, that we will understand with the help of one small example. Here I have said financial statement, right? Under financial statement, we'll prepare balance sheet. We'll understand in depth about balance sheet in the upcoming videos. Here just I'm showing an example. When you start a business, there will be two sides in the balance sheet. That is left hand side and right hand side. Our left hand side will be called as liability and your right hand side is called as asset. Always there will be two effects in the account. That effects also, after this example, you will understand in depth. Here, how you will start your business. The investment, whatever you have done to start the business is called as capital, right? So that capital will be recorded under the liability side. 1 lakh capital you have brought, you have invested in the business, and you have a cash of rupees 80,000. 80,000. So still you need more money to match with your capital. For that, you approached a bank, you borrowed a loan of rupees 50,000. 50,000. When you borrowed a loan, it created your obligation. At the same time, it increased your cash. The loan has increased your cash because you received cash from the bank. So, your cash has been increased from 80,000 plus 50,000 is 1 lakh 30,000, the present available cash with you. You need a machinery. You brought machinery for rupees 20,000. 1 lakh 50,000. 1 lakh 50,000. So your assets is your the economic resources which is going to give you a future benefits, and your obligations. These obligations are depends on what your economic resources available, whether you have a control on this assets and you are owned by you, right? Now you need to repay your loan. The obligation 1 lakh 50,000 is presently available asset, economic resources, right? With the help of this economic resources, you need to repay your obligation loan 50,000. 50,000. Now what is the remaining amount? 1 lakh. This will be claimed by the owners. So now understood. This is liability is claimed by the outsiders after clearing the obligation of the outsiders on the remaining amount the owners can claim. So now the owners can claim on this total assets. Total assets is 1 lakh. Now you have seen there two sides, right? LHS and RHS, and both were equal assets and liability. It is double entry system. This is called as modern approach. If you understand this modern approach, you will be able to solve all the journal and whole accounts, part of the accounts will be, and it will be very easy for you to understand. Under double entry, accounting attempts to record both effect. If you take any transaction, there will be two effect. One, either it will increase or decrease. That is positive effect also will be there and negative effect is also will be there. So that accounting attempts to record both effect of a transaction or event on the entity's financial statement. On the entity's financial statement. See, it is not debit is good, credit is bad. So there is no such rules or plus or minus. You need to understand this approach. There are many misconceptions is also there. So try to understand this very clearly. Debit and credit, it will be always equal. And here you can see the transactions. Each transactions will affect with these two aspects of accounting. One is debit aspect, another one is credit aspect. Every transaction has two effects, that is debit is equals to credit. This two aspects is called as duality principle or dual aspect. Duality principle or dual aspect. See, your dual aspect will affect on your financial statements, right? So financial statement includes the five elements. The five elements are asset, expenses, liability, equity and revenue. So how it will affect, we concentrate and understand these concepts. This is modern approach, and all the five elements here I have written: asset, expenses, liability, equity or capital. You know the difference between what is equity or capital, revenue or income. Here, balance, increase, decrease. Any asset, that is your economic resources. If you purchase, if it is increasing, then you will record under debit side. There will be two sides in the accounting, debit side and credit side. Every debit will have a credit. When you are showing an increase in the debit, the opposite you will show it when it is decreasing, you will show it in credit. Example, if you purchase any asset, it is coming into the business. You should think as an owner. So you are in business, you purchased machinery, you already had one, so it is added, right? 1 plus 1 becomes 2. So it is called as increase. Then that increase will be debited in case you sold the machinery. Now 1, 2 minus 1 is 1. So to show that decrease, you will credit. Expenses. If it is increasing, you paid salary, you paid rent, then you are showing that increase in debit. If it is decrease, then you are showing it in credit. Liability. If it is increased, you borrowed a loan, That increased part you will show it in credit, and decreased part you repaid the loan. The decreased part you will show it in debit. Equity or capital, you have raised a fund, you brought uh, additional capital, then that increase you will be crediting. If you repaid, then you are debiting. Revenue or income, if it is increasing, you are crediting. If it is decreasing, you are debiting. Revenue or income. Income means you have received rent, received commission, paid salary, paid wages. So if it is you received, then you are crediting. If you paid, then you are debiting. So this is about the modern approach. For assets, increase you are debiting, decrease you are crediting. Expenses, if it is increasing, then you are debiting. If it is decreasing, you are crediting. This you will understand with the help of journal. I am going to solve the problems also in the next videos. The same approach, this is called as modern approach. Now we will understand the traditional approach also. So traditional approach is based on the types of account. The types of accounts. Accounts are divided into two parts. Personal account, impersonal account. The personal account, again, this is subdivided into or classified into natural person, artificial person, representative person. Now natural person is created by incident. Now Anil account, Sunil account, Rani account, these are all called natural person account. Artificial person means they are not created naturally. Artificial means you have created. So example, companies. That's why we have a business entity concept. The concept says the owner and the business are not same. They are separate. They are separate. Now example, if you take, if you are using any network, like example Geo, Airtel, BSNL, if the network is not working, you won't blame the owner, or you won't say Mukesh network is not working, like that. You'll just say Geo network is not working, BSNL is not working, Airtel is not working, right? So that is why it is called as artificial person. It is created by a natural person. All business company comes under this artificial person. Representative person means the whole account, the collectively account, it is representing, it is called as representative person. Example, you know how much you should pay to each individual employees. Overall, you will call it as salary payable. The salary payable comes under this representative persons. Under impersonal account, we classified into two. That is real account, nominal account. The real account is includes tangible and intangible assets. The real account is related to the assets, and nominal account is related to your incomes and expenses, gains and losses. So this type of accounts will be used under the traditional system of bookkeeping. It is also called as the golden rule of accounting. So whichever is easy for you, you can apply. But so both the approaches will give you a same answer. Whichever is easy for you to understand, use that method while solving the problems or while passing the journal entries. See, here also we have seen the five elements, right? Asset, expenses, liability, equity or capital, revenue or income. So under this type of account also you can see the natural person, artificial person, representative person. All these persons is related to your capital. Real account is related to the assets, and nominal account is related to the incomes and expenses. Now, the golden rules of accounting. The first type is you have studied about personal account, right? Personal account. The two aspects, same two aspects we have. Debit, the receiver, credit, the giver. The person who receiving the amount we will be debiting. The person who is giving, we will credit. So here I have given one example. Ramu borrowed a loan from bank rupees 20,000. Now who is the receiver here? Ramu is the receiver. And from whom he borrowed? From bank he borrowed. So at present bank is the giver. So we are debiting Ramu and we are crediting bank. Ramu account data to bank account. So natural person, Anil's account, Rani account, all these persons account comes under natural person. Artificial persons means all the companies, BHEL account, BEL account, Infosys account, etc. Then representative, the convention is to reflect them as collective account. The example is salary payable. You know how much to pay individually, but you are showing collectively salary payable, overall salary for the month of the employees working in a concerned company. After the personal account, real account. Real account is nothing but the asset. So these assets are divided into two. They're classified into two parts. The tangible real account, intangible real account. Tangible real account is assets that have physical existence and can be seen and touched. The physical presence of the assets will be there. You can see and touch. That is machinery account, stock account, cash account. All this comes under tangible. Then intangible real account. It's just vice versa. These represent possession of property that have no physical existence but can be measured in terms of money and have value attached to them. That won't possess means occupy any places, but the value can be measured. That is very important. That's why in accounting we will record only money or money's worth, right? The example for the intangible asset is goodwill, trademark, patent, and copyrights, intellectual property rights, account, etc. are coming under the intangible account. Here, the rule which we are applying is debit what comes in, credit what goes out. We'll solve in detail problem while solving the journals. That time I'll apply these rules and I will show you. Now for your better understanding, I'll show small one of the example also. Now Raju purchased machinery for rupees 20,000. 20,000. Now here Raju purchased a machinery. So what is the rule? You need to debit what is coming in. You need to credit what is going out. Raju is purchasing machinery. The machinery is coming into the business. How he is purchasing? By paying cash. 20,000, right? So, machinery is coming in. Machinery account. You are debiting. And what is going out? Are they giving a free of cost or like a gift? No, you need to pay cash for that, right? So cash is going out. Cash is also an tangible assets. Here you can see in example also we have written. So cash account you are crediting. Okay, so in purchases also two types of purchases can take place. What are the two different types? One, cash purchase. Immediately you are making a payment after the purchase. That is called as cash purchase. So now the entry we have seen. Another type of purchase is credit purchase. Credit purchase. What do you mean by credit purchase? You're not making the payment immediately after the purchase. That's why it is called as credit purchase. So how you will identify it as the credit purchase? I will take another example. You can see Raju purchased machinery from Ramu at a cost of rupees 10,000. See here what is the name of the supplier is given. Whenever the name of the supplier is given, then it will be treated as credit purchase. Otherwise, directly they'll give us credit purchase from Ramu at a cost of. Then you are recording the concerned supplier name. Here now the purchase is happening. Only you are not paying the cash immediately. You are not making the payment immediately. But you are receiving the asset. So you are debiting machinery account. Machinery account. But you are not crediting the cash because you are not making a payment. You are recording the name of the supplier. Ramu account. Ramu account. Now, after 3 months or whatever the date you have assured, you are making a payment. So, you need to pass an another entry for this, right? Now, you need to debit. Ramu is comes under which account? Personal account. So, what is the rule of personal account? The rule of personal account is debit the receiver. Ramu is the receiver now, right? So Ramu account you are debiting and you are making a payment through cash. Cash is an asset. Cash account debtor. Your cash you are crediting. What is the rule of real account? Credit what goes out. You are making a payment. You are making a payment. Cash is going out. So cash you are credited. Okay. Any doubt? Now the account is clear. Here you have credited. So here you have debited. The books of accounts will be closed. Ramu account for that concerned transaction. Any doubts in this? You can pause the videos and watch again. The last one is nominal account. Nominal account is related to expenses or losses and incomes or gains. Salary account, wages account, commission received account, etc. are the examples of this nominal account. So here we will see one example. Wages paid rupees 3,000. 3,000 you have paid. So you are recording the nominal account rule is debit the expenses and losses, credit the incomes and gains. Okay, so debit the expenses or losses. Now wages paid is an example, example for expenses, right? So if you are a owner, paying wages for the work done is an expense for you, right? So their work done, you will get as revenue from that through sales. Then it becomes a revenue income to you. But you are making payment for them to work. So it is an expense for you. Wages account you are debiting, and how you are making wages, how you are paying wages through cash, right? So cash is going out, cash is coming under real account. The two different accounts are affecting, but by the nature of their account, we are using the aspects. We are crediting because cash is going out, the asset is going out. It is decreasing your cash. That is what you have seen in modern approach. So now understood the difference between traditional approach and the modern approach. We'll see one of the example for the income also. Commission received. Commission received. Commission received means how you are receiving commission through cash. You are receiving commission. So commission account you are debiting. You are debiting, and the income concerned income account commission received you are crediting. So in today's class we have covered and understood what is accounting and the process of accounting, elements of accounting, modern approach and traditional approach. Thank you for watching. If you like the video, don't forget to like and share. If you are not yet subscribed, kindly subscribe our channel. Thank you. See you in next video.